Let's first talk a little bit about volatility, Tom. And this chart I actually pulled before today's CPI print. But we haven't seen markets like this in quite some time, right? Where the Russell 2000's up 3%, Nasdaq's down 2%. You have sectors all over the place, predominantly sectors that have been leading this market higher: technology, discretionary communications, kind of selling off, and then seeing that flow into all of the sectors that have lagged behind: healthcare, materials, industrials, financials. Um, and also just VIX, volatility overall. We've seen this compression in volatility over the past couple of months, even though we're on the very low end of the of volatility for the past year or so. It continues to compress. Just wanted to get your take on one, just the general market dynamic in terms of how little correlation there is across the board, and what that means for you as a trader, and then also just your take on current volatility environment.
Okay, I'll start with the current volatility environment because I think that's probably a precursor to discussing anything else. And obviously, like you said, in 2024, volatility's been had kind of a lid on it. It's been hammered all year. It's we in this business we just call it contracting into obviously levels that are about a third below historical averages, but it's in what we call a lull state. And these are kind of the most dangerous states because when they end up resolving themselves or normalizing, it gets a little bumpy, gets a little more wild. I think right now what happens is really low volatility can lull you to sleep a little bit and can make you think that markets are, markets are a little, well, let's call it less volatile or safer. They have less movement, less expected move. I personally, obviously as a premium seller, I don't like low volatility. And, I like markets that have a lot of noise, and low volatility does not have a lot of noise. So I'm hoping that I'm not sure today is the start of anything, but I'm hoping that as this low volatility unwinds, whether it be the second half of this year or sometime into 2025 or beyond, because volatility is mean reverting. Volatility will go back to historical averages. And in order for it to get to historical averages, it'll have to be higher than the historical average to normalize where it is right now. So I expect that, we're going to see volatile times ahead. And that part gets me excited about, the next year or two of this business. As far as, the tape action going into today, it's really easy to sit here as a contrarian, which I am. It's very easy, Tony, to sit here and say, hey, you know what? I saw this coming. The reality is I did see it coming. I only thought it was coming like 3 months ago. so, so I think I was a little early. I mean, I've been long Russell, short S&Ps for for just under 3 months, like two months and two thirds. So, I mean, this has been an incredibly difficult trade because I thought this trade was overdone, just about 3 months ago, and it finally broke today a little bit the other way. I also think, a lot of us thought we're waiting for this sector rotation out of Nasdaq and into anything else, and I think today is the first day we really saw, a rotation out of tech stocks, out of that really tight, concentrated group at the top into the rest of the marketplace. And I think that although it is only day one, it is only the first time we've seen any of this, I do think it's a good sign. And I do hope that there is more than a little continuation, because I think it's good for the market to have two-sided trade. I don't think any trader likes one-sided moves.